Hi, and welcome to episode 5 of my financial independence journey. In this episode, I wanted to make a quick video to document my 2020 mid-year portfolio progress, and also take a look at my portfolio really quick and understand what sectors and percentages I'm invested in. So first, for this mid-year update, let me see where my portfolio stands. I'm logging into the MIT website, and I see that it's at $1,155,027 over all these accounts. And my rental properties, my two rental properties, are at $693,175. Now, what I've actually noticed is that the prices of these properties have kind of maintained, and that's pretty typical in the summer months for Phoenix because a lot of people aren't necessarily moving to Phoenix in the summer. But the rental estimates on Zillow have gone skyrocketing. They've actually gone up about $200 to $250. And I've been lucky because both my tenants, I believe, are gainfully employed, and they've been able to pay on time and no issues with that. So combining both my stock investments and my rental property investments, I'm looking at a total portfolio value of a little over $1.8 million. So we just saw what I had currently in my stock portfolio, but let's see what progress I've made year to date. Now, I found a previous video on January 13th, and in that video, it showed that I had $1,065,019 in my stock accounts, and as I just showed, I currently have $1,155,027. So that is a increase of $90,000, which is an 8% increase. But that's not all capital gains or dividends that I've made in the market. I looked around my various accounts, and I've contributed about $40,000 this year. So that leaves me with a gain of about $50,000, which is about 4.6% so far. And lastly, I wanted to see how my stock portfolio is allocated. I knew that I was probably more weighted towards technology than would be recommended, but just didn't understand how much. So first of all, let me go from the largest sections to the smallest sections. Index funds makes up 39%, and a lot of my index funds are in retirement type accounts where you really don't have a lot of options, but mainly these index funds are kind of like VOO or the S&P 500, and in technology related index funds. Next, technology is 30%, and I think the stock market gods must be giving me karma for all previous bad decisions I must have made for the beginning of my investment career, because technology has absolutely skyrocketed. I added to NVIDIA, I added to CrowdStrike, added to Twilio during this downturn, and I wouldn't even believe that how much they have gained. Twilio actually has doubled. CrowdStrike, I think, is almost about an 80%, and of course NVIDIA. Now, that said, I think a lot of technology is overvalued right now, and it probably wouldn't be the best entry point to a lot of technology stocks. But technology also makes up, and I do work in the technology industry, so I'm very biased towards technology. Technology makes up so many different sectors where you have a semiconductors, you have cybersecurity, you have of course consumer facing type technology or handsets like Apple or Samsung make. You also have the cloud players, whether it be infrastructure or software as a service, SaaS type cloud players, and then you have the traditional software players. There's so wide a realm around technology that just saying it's Apple, Google, and Facebook and Amazon is just really not doing it justice. And if you're not going further than those, then you've done very well, but it is much bigger than that. Next is healthcare. I do believe in the trend with people getting older, and I think that regardless of the election come November, that healthcare will continue to increase. Next, consumers. almost consider this like a defensive play. It's McDonald's, Starbucks, just kind of solid companies. Then after that, I have about 35 or 40,000, I think it's in cash, and I'm looking to actually have sector rotations out of technology, or kind of have technology pull back, and I would like to put more of that to work. But right now, I just don't see it being beneficial to put more money into technology at this time. Now, the rest of the sectors, industrials, I don't know a whole lot about those. It seems to me a lot of the industrial stocks, I hold Raytheon and 3M, are just so levered to good economies, and also economies of scale, where the entire world needs to have bull markets or having booming economies for them to work. So it seems like they're very cyclical. Finance, I have JP Morgan. I truly do not believe in the financial industry as a viable investment. Now, I do believe in Visa and MasterCard, Square, and PayPal, but those are in technology, or those are actually considered in the technology sector. Now, the traditional banks, I think that for them to survive, some of them have done things to progress themselves into this next era, but a lot of them haven't. And not that they're going to go bankrupt or die, but they're just going to rot away, and they're going to become more and more irrelevant. If you look at the trends, or the market capitalization size of the largest companies within the last 20 years, you look how oil companies like an Exxon, you look at banks that were the largest players in the market now are just falling by the wayside as these technology companies are getting bigger and bigger. Utilities, again, defensive play. Also, real estate, I don't really invest much in the stock market because I do own a couple of rental properties. Energy, I can't say I know much about energy at all, but I'm actually glad I do not touch the energy sector, because of course it's been a bloodbath for the past 5 to 10 years. Now, that said, I am really interested in renewable energy, and I did start kind of a pet home project to put solar panels up and start understanding how solar panels work. So this is actually my backyard, and this is producing about 1.5 kilowatt an hour. Now, all in, this is under $600, and I'm not using batteries. I'm not using these haven't been mounted properly. Of course, they need to be mounted on the roof and other things. But for as little money as this is, for $600, I basically, when the sun is out overhead where I'm getting direct sunlight, I'm basically nullifying the cost of electricity that I use in my house. And that's coming out to, and granted, we're in the summer, so it's very good conditions for solar panels, but I'm saving approximately about $1.50 to $2 a day, depending on how the sun is with the clouds. And granted, again, we're in Phoenix, so we have long, hot, sunny days in the summer. But I'm just astounded at how cheap it is to produce power. Now, the batteries are a different story, and I agree that they're a different level of cost, but I started to come to the conclusion that I just don't understand how everybody does not do this, or how the local municipalities just really don't mandate this, because this energy to be able to produce is so cheap. Next is bonds, and I have just a small portion of bonds. It's actually less than 1%, so that's why that shows up as this. And that concludes my mid-year update and my sector review. Thanks for watching, and good luck in the markets.